I don't like the way that looks.
Good morning, and thank you for joining us today. This is Coffee and Real Estate Scoop with Stacy, and we're excited to have Ed Martin as our guest today, who also happens to be my husband, but he's very knowledgeable, and we're excited to be able to talk to him today. Ed worked in IT as an executive for over 26 years and switched to real estate and is very knowledgeable about commercial real estate in particular. Also has experience with probate and many other things in regards to real estate. So Ed, welcome, and thanks for joining us today.
Thanks for having me. Glad to help. I hope that I can share some information about commercial real estate to the community.
Yes, well, thank you so much. So one of the things, first of all, is tell us a little bit about commercial real estate, and is commercial real estate a good investment? We get that question a lot.
It certainly can be. I think investors have to decide what their goals are. Obviously, the higher return investments come with risk. So traditionally, the stock market is seen over time as one of the best places to invest your money because it has higher returns, but also comes with higher risks. Certainly very obvious in the last couple months with the volatility that can exist in the stock market. And then the bond market or savings accounts or also certificates of deposit are seen as very low risk investments. So places you can put your money for a very low guaranteed return. Real estate kind of fills that void in between, where it's significantly more risk than the bond market, but not as much as the stock market. But it's also seen as significantly higher returns over time than the bond market, and not as higher returns as the stock market.
Okay, great. Another question that we get is, how will I know if the type of commercial real estate is permitted for the type of business that I want to do?
No, great question. So with commercial real estate, you have to deal with aspects of the community that you don't with traditional residential real estate. So for example, what are the permitted uses of that piece of property according to the zoning ordinance? And then what are the planned allowed uses according to the comprehensive master plan? So when you identify a property, you have to say, what municipality are we in? And what are their rules of the road, and what are their plans for that area where that property is as far as uses? So for example, they may not want you to operate a gas station where they have it zoned for things like churches or for a daycare or something like that. So there's going to be specifically permitted uses. Now, many times the municipality will allow you to have a special use permit, but they'll usually be very clear about what ones they'll even look at for a specific zoning. So zoning is usually worded in things like R1, which is traditionally a residential zone, B1, a business or commercial zone, I for industrial. Those are examples. A is another common prefix for agricultural.
Mm-hmm. All right. So what is one to do if they are already a commercial business, or possibly they're thinking about a startup? What do they do? What's the process to start their transaction? And how do they know that they're heading down the right path? Can you touch on that a little bit today?
Sure. So a lot of people come to me as a startup idea, and what I try to coach them on is it's important to have a documented plan. So for example, if you think you want to open a restaurant, either the lender, in the case of where you might be buying the property and financing it, or the landlord, in the case of the person that's going to allow you to occupy and have a leasehold on the property, they're going to look at you as a calculated risk. So they want to see that there's a lower chance of failure for when you start up that business. So the key thing is to talk to your advisory community, and your commercial real estate agent can be a key member of that advisory community. I do this all the time. And have them review your business plan. And don't take their questions or comments as criticism. Take that as constructive assistance to help make that plan better. A lender or a landlord wants to see that you've put some critical thought, and that it's not going to be all wine and roses or Pollyanna, that everything's going to go just exactly as you think. They want to know, for example, what do you think are the amount of months you can go without any revenue and still exist as a business? How much capital have you safely set aside for this venture that you're not having to tap into your critical savings account or the money you need to live on? They basically want to look at you and realize that you've intentionally put a plan together and thought about how this is probably likely to go, including some bad and good scenarios.
Right. Good advice. So what if I'm a business owner and I'm thinking about getting space? What's your opinion? Should you lease or should you try to purchase?
Yeah.
Commercial
So I get this a lot. So business owners traditionally can find real estate as a long-term investment or retirement plan. So, for example, they can use it as a place to pay themselves forward. So when they reach a point later in their career and maybe they're divesting themselves of their business or in their real estate, that can be part of their retirement. So that's a common approach. But certainly many businesses go the lease route, where they want the guaranteed use of the space, but they don't want some of the long-term risks from actually owning the space. So perhaps they don't want to have to worry about hard repairs or maintenance on the building. Perhaps they're looking to make sure that they've got a flat space expense or operating expense number, or relatively flat, so it's predictable. Perhaps they have a business that they need to make sure they stay in buildings that are current with the times. And so when you own a building that has a specific use, it might become functionally obsolete or technically obsolete over time. And so the business owner might want the flexibility to be able to change to a new property at the end of the lease and not be locked in to something they've bought. Mm-hmm. So, those are the kinds of things you have to think about, weighing the pros and cons. Mm-hmm. Certainly when you own the real estate, you get the benefits of the appreciation, you get the benefits of the tax savings from the depreciation or cost recovery you can take on it. And you get to pay your principal down towards that future retirement date if you'd like.
Is that similar to when you own residential real estate?
It is, except one thing you can do with commercial real estate is you can take cost recovery. And so cost recovery means there's a table you set with your CPA's help, and every year you can deduct depreciation expense from your income as a tax savings measure. So, of course, when you go to sell that property, there are considerations about deducting that, at the sale as far as your impact. But there are benefits with commercial property in that you can do cost recovery and basically adjust your basis.
Okay. Another question is, what if I need to make, or I'm concerned about making my building or my space handicap accessible? And
Yes.
maybe it's not when I'm looking at it. What do we go through?
It's a great example. Like I was talking earlier about things like obsolescence and so when you take on a building, if you bring in tenants that have specific needs, or if your business has a need where you need to take in people with wheelchair needs or things like that, you have to plan for maybe it's elevator access, or perhaps it's putting in ramps. So, or even more importantly, what I see is as a tenant turns over, the landlord has a cost to take a previously built bathroom and make it ADA compliant so that people with wheelchairs can access it. So that's something you take on when you actually own the real estate.
Mm-hmm. Okay. And so if I was leasing, would the owner do that, or would that cost be on the business owner?
Yeah, so that's generally on the business owner for something like that, because it's something that they think is going to benefit the building long term. They see a tenant, obviously they'd love to see a tenant for as long as possible in a lease, but they see a tenant as a point in time occupant of their space. And they realize that when they're making improvements or changes to the space or to the overall building, that they have to consider, what is that going to mean for the marketability of this space or any future costs when I look for a future tenant.
Mm-hmm. Okay. Can you tell us Ed, how is the commercial real estate value determined? Is it similar to residential purchases? Do you do an appraisal? How is it
Yeah.
determined?
No, it's a very good question. There are distinct differences. So value is a loose word that different people will apply depending upon what they think it is. Now, what a traditional commercial real estate appraisal constitutes is looking at several different methods of determining value. Of course, one is very similar to residential real estate, which is looking at similar sales or comparable sales. What have recent things like this building in this general area closed for? And we can use that as a basis. Certainly that's the one that people coming into real estate for the first time think about, because that's more similar to residential real estate. But there are other methods that value can be determined. And when an appraiser looks at evaluating a property, they take all of these into consideration. Another is cost to rebuild. So what are the cost of supplies? If this building or this property was razed or cleared and we needed to rebuild it from the start, what would be the cost of construction of putting this property back into place? Mm-hmm. Another one, and this is one that's usually brought into play more with income generating properties as opposed to one where the owner is just going to use it, is cap rate. And so cap rate is a key metric that's used as a good rule of thumb for getting a valuation range. And so generally an area will have a cap rate. Cap rate is calculated by taking the net operating income of a real estate investment and dividing it by its acquisition price or its purchase price. And so an area will have a trend of a cap rate. Now, generally, higher value properties, more dense areas have lower cap rates. So they have higher values and they don't have as much adjustment in their net operating income you can generate. But if you go into secondary markets or go further out, you can usually find higher cap rates. So investors, if they're just in it for the straight investment game, remember they're comparing this to the stock market, which has an 8% return over history, right? So they're looking at that and they're saying, boy, we'd love to beat the stock market. So cap rates, if they see something that approaches double digit for an advertised property, then they start to ask questions. Now, certainly people can be more conservative real estate investors and look for cap rates at 5, 6, 7. But again, it's about what your goals are and what your real estate tolerance is. So cap rate is the third way that an appraiser will evaluate a property. They'll look simply at, what comparables, what's the cost to rebuild, and then what's the cap rate in that area as a quick valuation method.
Ed, what has good cap rates right now? Such as, does industrial space or office space? What's the hot thing right now?
It's actually usually more around the geography of area. Now, added to that, you have to say, what's the demand for space in those different sectors? So industrial, it's anticipated that there'll be increased demand in that space, which would drive up the rents, which would drive up the net operating income, which would have an effect on the cap rate. But it's usually around geography, because unable to calculate net operating income, you're taking rent minus things like property taxes, operating expenses, insurance, to actually get to that net. So there are a number of things go into that, but rent is the biggest expense. There's just differences depending upon what that demand is for space and what the geography. What I get a lot of calls on are multifamily. So there are a number of people that see huge opportunity in multifamily and view that they can create value on that property and raise the net operating income, ultimately raising the cap rate.
Mm-hmm. Okay. So I've had somebody ask before, what kind of space should I get if I want to open a winery? And, do I look for the building? Do I look for the land? How do I scout out the locations to make sure that I'm successful? Like, what comes first?
Yeah. So a couple things. You really have to, again, start with what's your plan. Rather than start with a property and a dream, think about how you're going to operate it. So if you're going to operate a winery, are you going to have a tasting room? Are you going to plan to have a lot of customers, or are you just going to make wine and distribute it? So that factors into what governing ordinances and zoning that you might need to apply towards your thought process before you open a winery.
So if I'm going to have a tasting room, it can't be just residential.
Correct. But one of the neat things about Virginia with wineries and breweries is there are farm winery brewery laws that Virginia has tried to encourage the growth of this industry, and those statewide laws actually supersede a lot of local zoning ordinances. So if you're going to meet the criteria of what those farm winery and brewery laws are, you can do a lot more things than you normally might be able to do in a specific county or municipality. The key thing is to find a commercial agent that can help you interpret that and help you focus your search based on what your needs are. There's an old saying, so you have to be careful, that the best way to make a small fortune in the winery business is to start with a large fortune, because it can be a lot of hidden expenses that you're not thinking of. And this goes into, why a lender is really going to want to see what your business plan is and seeing what kind of critical thought you put into how it's going to go.
Where would someone start, with the lender or with a commercial agent?
I mean, I'm selfish, but I'd always say start with a commercial agent, because we're really a multi-tooled advisor. We can help you not just with the property search, but also the business plan. We can bring in allied resources like lenders, attorneys, if you need an attorney review for things. We're just a key partner in what you're doing with your startup or with your search.
What if we have a situation where a client has a business to sell, but they lease the property they're in?
It's a great model. A lot of business owners do that. When they acquire property for their own use, they'll separate out the different entities that own it. Perhaps they'll have their business pay rent to an LLC that they've established to hold title in the property. It's a recommended course of action, because when you go to divest one or the other or both, it gives you a lot more flexibility. So if you've done that, it's much more easier to sell off your business or to do a sale leaseback on your property. Those are two scenarios that can give you a lot more flexibility as a proprietor or business owner. So when you think about that, if you do a sale leaseback, you can sell the property out from under you and then know that at the end of your lease, you can close down your business or you can move it to another property. So very important variable. But if you just want to sell your business, I'd also do business brokerage. So I help look at a couple years of P&L and determine your EBITDA, which is your earnings before interest, taxes, depreciation, and amortization, and come up with a range of value that could be used to market your business through the business brokerage circles.
Okay, great. You mentioned, and I spoke at the beginning and mentioned that you had had experience in probate. And when people hear probate, they typically think about residential probate, but probate also is related to commercial real estate. Can you tell us a little bit about that?
Yeah, it's amazing how many people in their forward thoughts or their plans for their life never record what to do with their property at the end of their life. And believe it or not, over 30% of probate real estate is commercial real estate. And so when I talk about, as a business owner, having a plan, that plan should also have an exit strategy. And that exit strategy could include what to do with your property when you pass away. So in Virginia, it's a little simpler. Is it that if you've either set up a trust to hold property or you have a will that has determined where that can go, it can be a little bit more cut and dry. But what I'm here as a certified probate real estate specialist to do for you is help you navigate that process in partnership with the attorney that's helping you through that probate.
Okay, great. Just a little bit about the state of the market from your perspective right now with the situation we're going through now with COVID-19 and that type of thing. How has that affected the market here? I know you're licensed in DC, Virginia, and Maryland. So
Yeah.
what's happening here in our local region?
Yeah, it's there's been some immediate impacts. So some transactions that were in process and contingent when the pandemic opened up have ended or been canceled. People react to risk different ways. Some people see risk as opportunity. Some people see risk as uncertainty. And we've seen some transactions get canceled. However, we've also seen new transactions come into play. So again, people seizing that opportunity. Every webinar I go to, every group meeting I'm in, every industry magazine or website I follow talks to these two factors that seem to be holding true. There's going to be a lot of change in office, and there's going to be some impact to retail. So in commercial real estate, there are several large categories. There's office, retail, industrial, hospitality, multifamily, and then there's specialty properties. And so office and retail are two of the larger pieces of that commercial real estate industry. And quite frankly, what we're doing right now, we're working virtually, and we've overcome some of our objections by necessity to what it's like to work virtually. So that's absolutely expected that office will have an impact. And then retail, if you weren't an essential business and you counted on customers to come in your door, you're maybe behind on your rent, or if you're an owner of a property that's multi-tenant, that has multiple retail establishments in there, you're behind on your income as a result of that. So it's expected there's going to be some adverse impact to office and retail. What I hear consistently is the opportunity is going to be more in industrial. So two factors go into that. We've become even more dependent on point-and-click purchasing or e-commerce, e-tailing. Amazon, who doesn't have an Amazon account and can say to your Echo to order you whatever you need it to order, and have it show up in a day if you've got Amazon Prime, right? But that's going to put more of a demand on distribution systems and warehouses. And then on top of that, it's expected that the continued trend towards legalization of cannabis or marijuana is going to drive up demand on industrial real estate. So many parts of the country can't be year-round growth areas because of the climate. And so what has been seen in some of the areas that were early legalizers of marijuana, like Colorado, for example, is an incredible demand on industrial. So they basically would bring the growing indoors into large warehouses with artificial light.
Mm-hmm. Okay. All right, great. So it's still a good time to get into the market if you're thinking about getting a space.
I think so. I think so. I think there's opportunity. I had tours this week with several different potential tenant clients, and just in my conversations with the property managers or the commercial brokers that were listing the space, there was, ask us for a proposal was the language, meaning we'll try to find a way to work with you. Of course, nobody wants to give away the space because everybody's in the business of trying to make money, but if you present yourself as a strong business owner with a plan, lenders will want to help you and landlords will want to work with you.
Mm-hmm. Okay, great. Any questions from folks joining us?
Hi, Ed. What advice would you give someone that's new coming into commercial real estate?
One of the key things I'd give somebody that's new is, first of all, find a mentor. So commercial real estate is a large, complex, could be risk generating to the agent industry, since there's so many things you have to become an expert on right away. Finding a mentor that's experienced in the industry, which I've been fortunate enough to have, is very key. And the other thing is, get the word out about who you are through a community. So if that's residential realtors, if that's business owners, if that's chamber of commerce, that's something I would do. I've pursued education. So I get the education from my mentor, but I've also been able to get education through other avenues as well. KW Commercial, which I'm a part of, actually does a very good job of giving you a good foundation of education right away as soon as you join. So they give you access to the Mike Lipsey curriculum on real estate, which gives you an MICP at the end of a year, which is a master's in commercial properties. So I think there's a lot of value to having an organization that can give you that foundation quickly, and then also somebody that's looking out for you to help coach you through the process and the pitfalls that are eventually going to come with commercial real estate. You've really got to look out for your client's best interest, and it's in the, you know, the realtor code of ethics that you're expected to do that and live by it. So hopefully that helps.
Yes, thank you.
You bet.
Okay, great. So any closing thoughts, Ed, that you wanted to share with us today before we wrap up? Maybe how to get in touch with you, and maybe about your social media pages and places where you're posting your...
Absolutely. Please don't hesitate to reach out. I'm at 703-867-3350. And I can also be reached via email at edmartin@kwcommercial.com. Web presence is at novacommercialproperties.com. So I'm available to help answer any questions offline, to talk to people who are thinking about either getting in the commercial real estate business or are looking to conduct commercial real estate business. I say that the 4 types of customers I'm looking for are people that are investors, people who currently own buildings and need help, people who are business owners, either established or startup, or people that might be executives that make space planning decisions for their employer or their company. So anybody you know in your community that might need to partner with me, I tap into my past experience as an executive to really be an advisor and a resource to them.
Okay, great. And how would someone reach you through social media?
I'm on Facebook. You could find me. That's probably the easiest way. I'm also on LinkedIn. And then on Facebook, I have a business page, Nova Commercial Properties.
Okay, great. All right, super. Well, again, I'm Stacy Martin with Keller Williams Realty, and this was Real Estate Scoop with Stacy. We do this every week at 10 o'clock on Saturdays, and we have several other versions of interviews on my page, which is the Martin DreamToHOME Team. So if you'd like to connect with us there, that would be great as well. My number is 703-795-3959, and my email address is stacy@dream2home.com. Thanks so much, everybody, for joining us, and have a great weekend.
Thanks for having me.
Sure.